We've watched the markets really take off over the last 7 weeks or so and continue to perform, even based on yesterday's numbers. I saw a really interesting tweet this morning, though. It had a bull running down the street and kind of upending a car. Somebody said, this is a live view of the markets right now. What could possibly go wrong? Jurrien, what do you think? What could go wrong here?
Usually after a very sharp V bottom like we had in December, S&P down 20% very briefly and now up about 16% from there, you do generally tend to see some sort of retest, not a complete retest, but maybe a 50% retracement or something like that. So that's a fairly common technical development. So the question is, what would drive that? It could be disappointment over trade. My policy is sort of to have low expectations, and therefore I'm not likely to get disappointed. It could be also concern about earnings. Earnings growth estimates are falling very quickly. We're down to about 5% for 2019, and at this rate, we're lucky to get anything positive, really. And thirdly, it could be about worries about the Fed, that even though it has pivoted from raising rates further to being on hold, maybe even for the entire cycle, but certainly for the next 6 months or so, that maybe the Fed needs to be easing. I don't believe it does, but maybe that's something that the market could worry about. But when I look at that bottom in December, it met the 4 criteria for what I look at. Earnings, liquidity, valuation, sentiment, and investors locked in $83 billion worth of losses in December, which is very unfortunate, but it also creates bottoms. And the Fed has pivoted, and there's no sign of a recession, at least not in the U.S. So it's really earnings, I think, that will drive the bus going forward, and we need the estimates to start stabilizing here, but so far they're not. So I think that could be the thing that keeps people worried.
Hans, let me turn that on its head and ask you what could go right from here.
Well, I think what could go right is we get the earnings that the market is hoping to get. So you get, as Ari said, stabilization of earnings. Fed doesn't do anything, which I think will not be the case. And you get continuation of this alleviation of uncertainty around the government shutdown, trade, perhaps even Brexit. We get resolution one way or not there. It'll be messy, but those are the things that I think could go right. I still think at the end of the year, we're going to be up somewhere on the order of 8, 9, 10% total return, which is kind of where we are right now, but which means that we're in for a period of pretty tough sledding between now and the end of the year.
So you would be telling people to lock in these gains and kind of hold out and wait for some volatility before you jump back in?
What I'd be telling people right now is that if you have new capital to commit, drag your feet, number one. Number two, if you have invested capital at this point, you should start combing through your portfolio to look at those marginal holdings that perhaps this snapback has given you profits in again, that things that you had on deck for sale. Now's a good time to take those gains if you have them.
You agree with that, Jurrien?
For long-term investors, you basically do what you always do, which is basically nothing other than execute on your plan. So again, I think that correction we had last quarter should have been a 10 to 15% correction, but a confluence of circumstances caused it to be a 20% correction, in part because of liquidation in the crowded momentum trades, but also a lack of liquidity going into year end. So now we've reversed about 75% of that, or about 70% of that. And so the market corrects, all the time, and it still delivers a good return over the long term. So if you're a long-term investor, you basically stick to your plan and make sure you're not one of those people who in December locked in a 20% loss.
Right.
But if you're more tactical, yes, certainly we have rallied a lot. A retest usually happens over the next few months. So if you're looking to buy, you'll probably get a better shot at it in the next 6 to 8 weeks or so.
Hans, I'll give you the last quick word. One thing that would tempt you to make you say, okay, time to jump back in?
What thing that, well, if we had a bit of a sell-off here, if we had the correction that you're always talking about, a sort of a retest of the lows, that would make me very interested to jump back in.